Good morning, the Entrepreneur Nation. Lucy and Jeffrey here. I'm the president and CEO of the Entrepreneur Nation. I've come live today and I've not been live for a long time. I was enjoying my vacation but working while I was away. But today I thought I'll come here and introduce to us one of our newest member. And this is a member that we have in Toronto, and his name is Daryl Ching. He's a CFO, and you tell us all that. Welcome, Daryl.
Thank you, Lucy. Really, really happy to be here.
I'm actually happy to have you at the Entrepreneur Nation. By the way, our viewers, we've been doing some TV interview, but now we are a little bit more relaxed because this is not TV. I'm really happy to have you at the Entrepreneur Nation. I just want you to know. Maybe I never told you, and now I'm telling you publicly.
Lucy, even if you never said it, I felt it every day.
Excellent, because you sound very positive, you sound very eager, you want to do things. And so I want you to tell our viewers and on LinkedIn now a little bit about yourself.
For sure. I was born in Canada, so I'm a second generation Canadian. I went to the University of Western Ontario and got my honors economics degree. And then my first job was in investment banking at RBC Capital Markets. And so, it was a great place to start your career, brand name bank, a lot of exciting work. But this is where I discovered that this was probably not the right environment for me because I found that myself wanting to go after new clients. I found myself wanting to, get new types of revenue. I wanted to be innovative. And in this environment, when you have five big banks and you've got an oligopoly in Canada, they're the they don't need to go after new clients. They're happy going after existing clients. They're happy doing repeat deals with large Fortune 500 companies. And this is when I realized that I need to go somewhere else if I want to exercise my creative juices. But more than that, I discovered I'm actually an entrepreneur because I want to be able to create new things. I want to be innovative. I want to be able to do research and development and develop new products, new services. And this is I had a lot of self-discovery during this process.
Awesome, great, Daryl. So you decided to become a CFO and fractional CFO, right? We hear those terminologies, but
Mhm.
would you like to clarify to our viewers on LinkedIn and members of the Entrepreneur Nation, what does that mean?
For sure. When you look at a small business, they're often structured with a bookkeeper and an accountant that shows up once a year that does their taxes in a notice to reader engagement, which basically is an engagement where they don't verify or review anything. They just submit the financials as is. This means that a typical small business is not getting any advice when it comes to finance. So when it comes to questions like, hey, can you help me manage my cash flow? How do I set up payroll? Um, can you help me with projections? Because I'm trying to make some big business decisions. Should I do e-commerce or should I do business B2B? Should I be expanding into the US or should I stay in Canada? These are big decisions that require financial analysis. So we provide a lot of the analysis and budgeting that is required for these big decisions. When people are preparing financial statements for investors, they're not accurate because a bookkeeper does not know to ask certain questions like, should this is this research and development and should be capitalized as an intangible asset on the balance sheet? Is foreign exchange being booked properly? Do you have any personal expenses that should be business, i.e., did you use your personal credit card or personal bank account? Bookkeepers don't know to ask these questions. So what ends up happening a lot of times is companies think they've got good financial statements because they have an accountant that shows up once a year. Then they hand their financial statements to an investor for financing, whether they give it to a bank or an equity investor. And during the due diligence process, they find out, oh no, my financials are actually very, very inaccurate and do not reflect what I've been saying in my business plan. A CFO can prevent that because we know how to prepare financials in a format that's investor ready to ask the right questions to make sure that they are in the right place. So that's the second component, is making sure that you have accurate financial statements. The third component in general is so of why you need a CFO is ongoing operational accounting advice. So often when I ask companies, do you have monthly financial statements? They will often say no, or they'll say, yeah, but I don't really look at them. And so how do we prepare financial statements in a way that a CEO and entrepreneur will want to see them? And often it's not just taking a printout from QuickBooks and handing it to a CEO. It's going through the financial statements and carving out important metrics and KPIs for the CEO so they want to see them every month. So it could be gross profit margin. And if you're selling a product, is shipping, cost of inventory in line with what it should be month to month, or is inflation hitting us so that maybe we should be looking at changing vendors or raising prices? Are fixed costs in line? Have we ballooned? Do we have too much subscriptions and software expenses that are unnecessary that need to be cut? Well, a lot of bookkeepers won't ask you that question. And a lot of times, even accountants won't ask you that question because they're focused on tax. A CFO will ask those questions. So a CFO will ensure that your profit is maximized every month. So you're not waiting till the end of the year and having a surprise and going, oh, I lost money. That's too bad. I can't go back and fix it now. So a CFO can help in many ways. And we call it fractional CFO because a lot of small businesses don't need a full-time CFO. A lot of small businesses can't afford a CFO for $300,000 a year. So they can take them in bite-sized pieces and say, okay, I need a CFO for maybe 10 hours a month, and then expand it as they grow their business. So CFO essentially is a sounding board. It helps you with your financial statements to make them accurate, helps you with large business decisions like pivoting your business strategy, and ensures that you're running your business well from a financial perspective.
Thank you. Thank you so much, Daryl. It's good to know that. And we are not going to cover all the questions that we've covered on TV. We want people to be able to watch. But I wanted to ask you about business financing. There are some things you have said that I didn't would like our members to watch that on LinkedIn. Tell me, how do you help businesses, small business owners with the financing?
So Lucy, I don't mean to sound pessimistic. I try to be glass half full, but business financing at an early stage, especially startup, is extremely difficult in Canada. And it's gotten more difficult post-COVID. So the easiest way to raise capital at an early stage is really approach friends and family and maybe even do a Kickstarter campaign at a very, very early stage. Now, they said, well, I don't want to bother my friends and family, so what can I do? You can approach equity investors. And when I talk about equity investors, there's incubators. So you can join an incubator that provides office space, that provides advisors, and they take a small percentage of your company. You can go to angel networks like Maple Leaf Angels and Keiretsu. You could approach venture capital firms. What has changed recently is that a lot of these investors are now requiring companies to be further along in order to invest. So the real concept that they focus on is called proof of concept. So proof of concept can mean many things, but if let's just say you're launching a technology platform and it's a SaaS platform and you're beta testing with a client, and a client says, I really love your platform, and they use it and it's effective. Well, that's partial proof of concept because you've proved that you have a product that works. But at the end of the day, the question becomes, will your product sell? If you're selling your product for $100 a month, do you have customers lined up that will pay $100 a month? And you can't prove that until you actually get customers and you start generating revenue. So the best proof of concept actually is revenue. And what's happening right now is a lot of investors are saying, well, I prefer a company that has demonstrated proof of concept and has revenue. I'll be paying a higher valuation, but I prefer that because it reduces my risk. So if you're much earlier stage, it's more difficult. You can approach the BDC for a loan. That's the Business Development Bank of Canada. They are a federal entity. They're not a profit maximizing organization. So they are willing to lend at an earlier stage than, for example, a bank would. But in a lot of those circumstances, they do require a personal guarantee, and their rates are quite high. You're looking at paying like 8, 9%, or even double-digit interest rates to obtain those loans for financing. And then there's obviously grants and subsidies available. So if you are looking at launching new products that are innovative, to the extent that you have research and development costs, there are some great programs in Canada that provide grants and subsidies in that space. Shred is a good example. IRAP is another good example. If you're hiring students or summer students, or if you're hiring recent graduates university, there's subsidies for wages for these programs. There's regional subsidy programs. So if you're living in certain parts of Canada, there are regions that will provide financing as well. So it's best to work with an accounting company that is well versed in that area, is familiar with the grants and subsidies, and proactively tells you if you qualify for these grants and whether you should be applying or not.
Awesome, Daryl. So another question that I'm going to ask you, because so many entrepreneurs are like me, use me as a guinea pig. I worked in the banking sector just like you, but I never dealt with numbers. I was always dealing with customer service and sales. So numbers are not my best friends. So as a business owner, and do you really need to understand everything? Right? As long as I know how much money is coming in and how much money is going and what's my net, profit, do I need to understand everything?
So Lucy, we meet a lot of entrepreneurs that are in the same boat where they're like, I'm not an accountant. I can, do I need to know everything? And the answer is no. But do you need to know something? You absolutely need. You absolutely do when it comes to having to know a few points. So what we like to do is we like to break out the profit and loss statement into 10 key lines that are much easier to understand. And I know the frustration. A lot of times when you work with accountants, they'll just do a printout out of QuickBooks that has 50 to 100 line items and hand it to you and go, good luck. And it's very difficult to make sense of it if you don't have accounting training. So from our perspective, it's really obviously it's important to understand revenue, which most of our clients do in terms of top line revenue, and breaking it out by different types of revenue. So if you're in the service-based industry, you should know how much recurring revenue you have versus project-based revenue. And then the next important step are cost of goods sold and gross profit. And when I talk about gross profit, I mean, when I subtract out my variable costs for each product, what do I make on each unit that I sell? That's gross profit margin. So let's say, for example, that your gross profit margin on your product is 40%. And then really understand the components behind it. So if you're selling a product, there's shipping and there's cost of inventory and there's discounts, as an example. Well, tracking these three metrics is really important, because if one day we open your off profit and loss statement and you notice your profit margin drop from 40% to 30%, you need to understand why. Well, during COVID, there was a lot of inflation. So did shipping costs go up because of inflation? And when we identify those problems, you need to solve them quickly. Is my vendor overcharging me? Should I be shopping and looking for a new vendor? Okay, if this is a global phenomenon, should I be raising my pricing so I maintain my margins? And then finally, under the fixed expenses, we categorize them into sales and marketing and general administrative and research and development. So that you have three broad categories of fixed expenses. And if you notice a noticeable bump in any of those areas from month to month, then you go in and investigate and go, why did my fixed costs go up? So sales and marketing could be variable, because you, based on your budget and based on how much profit you make, you decide how much you want to put into advertising. But for general and administrative, for costs like rent, office supplies, they should be fairly steady. So if you see a spike in general administrative, you should check and go, what's going on? And should I be cutting? And it's important for an entrepreneur to know these key metrics, because rather than waiting till the end of the year and being surprised and going, wow, I lost money, why not address them right away? So by focusing on these 10 key metrics, you're able to know exactly how your business is doing, and you're able to make real-time adjustments to ensure that a lot of these issues are being taken care of right away, so you're not slipping and losing profit.
Awesome. And Daryl, I think there's a question I wanted to ask you and forgot on TV. So let me ask you now. What are the considerations that business owners should make when they're planning to sell a business?
So from that perspective, here's what happens a lot of times. When you look at small family businesses, they haven't really been looking at profit maximization because they've been looking at minimizing taxes. So what ends up a lot of times happening is a lot of businesses will run their business to minimize taxes by putting in extra expenses. So it's quite common for a lot of family businesses to show zero profit or negative profit, and it doesn't really bother them. But if you think about what a potential buyer is going to ask, the first thing that a potential buyer is going to ask for is 3 years of historical financial statements. And if you've been reporting losses to CRA, you are now handing financial statements that show losses. So valuation is based often on a multiple of your profit. So what's a multiple of zero? It's zero. So I think when I speak to a lot of business owners that are looking to sell, they're often disappointed by the bids they get from investors because of this fact. So one of the first pieces of advice I give is let's minimize expenses. If you had expenses that are not quite necessary, let's get rid of them. And let's get to a point where we have 3 years of solid profit to show an investor. The other shift in mentality is often when I visit businesses, I see business owners that are still making too many day-to-day decisions. So if I'm in a meeting with a business owner and the business owner gets interrupted like 5 times in an hour meeting, that means that they're still too embroiled in the day-to-day decisions. So one of the things that I try to do is I advise business owners to develop processes and have capable managers in place or people in place to make decisions so that only, for example, exceptions go to the business owner. Because a business owner, from my opinion, should really be focused on vision, business, and strategy. They should not be involved in whether they should be giving credit terms to every customer. So we help companies develop that because from an investor perspective, a business that requires a business owner to be fully involved in making day-to-day decisions is less valuable than a business that can run itself.
Awesome and great, Daryl. It seems like we might do monthly sessions like this with you and address several things because you really seem to be a great advisor from business owners. But as we come to an end, because we'll not keep our LinkedIn friends there for too long, tell me a little bit about your experience at the Entrepreneur Nation. And as I said, I'm really grateful that you made a decision to join.
For sure, Lucy. First, I want to thank you and appreciate the Entrepreneur Nation and thank the work that you've done to create this network. As CEOs, as owners, sometimes it gets a bit lonely here because there are a lot of decisions that we can't bounce off of other people. I can't go to my employees and ask them about difficult business decisions. Just they're not in the right place for me to be asking these questions. So it's useful to have a network with other entrepreneurs that are going through the same thing as I am. And to have entrepreneurs say, hey, I'm experiencing this challenge. Have you experienced it before? Can you offer any advice? But more than that advice for our sanity, sometimes all you need is a shoulder to cry on because we have really, really difficult situations as entrepreneurs. So it's great to have this network for support, not only from a business perspective, from an emotional perspective. So thank you, Lucy, for creating this network. I've really enjoyed it, and I really enjoyed talking to you other fellow entrepreneurs.
Thank you. And I remember, Daryl, I think late last year, I wanted to make a decision about my business. It was not a legal decision.
Mhm.
And I really struggled and spent like almost a month thinking every night of how to make that decision.
Mhm.
And the only person I could trust at that time was my corporate lawyer. Right. So my corporate lawyer is part of the CEO's Club in London. And I went to him and said, this is not a legal question. I just want to ask you this. I thought he would laugh at me, but he never laughed at me. But the answer that he gave me, which is not a legal answer, was so perfect.
Mhm.
Right. So we need each other. Right. Because
Yes.
when you worked in the bank and I worked in the bank, we have, all the decisions coming from the top, but ourselves as self-employed people, we need each other, and building that trust is what makes us want to reach out and talk to each other. So thank you so much. I think, Daryl, you and I should come here more often, as often that you have something that you want to share with our members.
Lucy, that's a great idea. I've really enjoyed this discussion, and I'd love to share more, as much information as I have.
Awesome. Thank you so much. Our viewers on LinkedIn and members of the Entrepreneur Nation, I'm right here. Whenever you need me, just come forward and we do a live video.